G'day there, everybody. Thanks a lot for joining me as at this Thursday afternoon market recap. This is the chart of the Dow Jones Industrial Average in the top left-hand corner of my screen. You can see obviously what has really transpired over the past 4 sessions, really continuing off from that reversal candle that we saw on Friday of last week. This is what we pointed out that was most likely going to happen up and around the resistance area that has been forming on the Dow Jones Industrial Average, not only back until April and also May of this year, but if I zoom out also and show you this, more or less it goes all the way back to the very beginning, of 2018. Here we are, again, at the beginning of the 4th quarter, leading into the end of 2018. So this is the second tag up on here, just shy of 27,000. We've had a third test again back in that April-May type of vicinity. Here we are once again as we move into that of July. So it doesn't really come as all that much of a surprise to see that of resistance continuing to hold us at the current juncture. What is very interesting to note is that we did get that shooting star candle, and really since then, this is Monday's candle just here, we have seen the Dow, also this extends to the S&P 500 and the NASDAQ, actually pulling back from this resistance area. Now the question becomes again, and I've already sort of touched on this subject prior to, of course, the markets getting on up into this resistance area, is, well, where are these markets going to go, right? As we not only say goodbye to the final, really, trading session of June, but also as we enter into the period of July. And it's really one of two things, okay? There's two options as to what these markets are going to do and what you need to look for, right, moving forward. As it stands, okay, we still assume, to a lesser extent, you could say that we are going to come down. We may not get all the way back into this primary bullish trend line, but this is essentially the trend of the markets. It doesn't only extend to the industrial average. It's picking up also on the S&P and the NASDAQ, okay? So that is essentially portal number one. We find the rejection like we've already done. Really, the reversal took place on Friday of last week. We see the markets over time pulling back down into this rising area of support. Option number two, and this may very well happen as well, this might surprise a lot of people, is that we may be setting up, okay, some form of a bull flag continuation. And this is really starting to take formation, really again, starting off from Friday's candle to close last week's worth of trade. And you can see here, we have been pulling back in a rather controlled manner. And if I also bring up the right technical indicators too, you can see that we've got the exponential moving averages. In fact, today, you can see price action coming back on down into that rising 10 exponential moving average. We haven't seen a reaction yet, although we do have that of sort of a doji candlestick during today's session. It does take the formation, and it makes sense for this pattern to actually set up, where it is. However, when we start looking at least further into at least the spectrum of indicators, you can see that we still have a long way to go if we are to actually cross on back down. So you can see technically that we're trying to push out of overbought settings. On the Stokes, the RSI, the MACD, it hasn't technically crossed. And again, it doesn't necessarily mean that you need to see the markets coming down here. That's why we have one of two options, all right? We're under the mindset that one of these two things is really going to play out. What's more important right now, and again, maybe I should have just jumped to this to begin with, is really what the ADX and the CCI is telling us. Because generally what happens, and just to sort of let you in on a little bit of a secret here, generally what will happen is that the markets won't definitively break out, and this includes individual stocks as well, and also commodities and Forex too. But generally what will happen is that the instrument, or at least the trade vehicle, i.e. the actual ticker symbol that you're following, when you're coming up multiple times into resistance and you actually see the ADX rather elevated, or at least above the 20, it means that it needs a little bit more time to rest until you see that definitive pop. So this more so weighs into at least a sideways continuational type of move, or again, we come back down into this rising trend line. So watch the ADX. When the ADX, or at least if it continues to sell off, watch it come back down to the resting period. Hopefully, the CCI over here, the Commodity Channel Index, will still be close to 100. And if you see price action still holding up around 26,750 on the Dow Jones Industrial Average, that is going to be the final sort of confirmation prior to the breakout that you are going to see. Ultimately, both of these portals, goes without saying, lead to higher prices, okay? So right now we're sort of ticking down the time until these markets do technically break out once again, and I say definitively across the board, whereby we see all three of the closely followed US markets in agreement with one another. That would be fantastic, whereby you see the industrial average breaking out to fresh new all-time highs along with the S&P and also the NASDAQ. You could also sort of Flip in there the transportational average as well if you wanted to use some Dow theory of the industrial averages. That would all be well and good. But really, again, just to surmise what is simply happening through the eyes of chart patterns is that we are in the formation still, and we certainly are within the parameters of that of this rising triangle. And if I can bring up that blue colored line on my screen, we've been talking about this, okay? And essentially this can continue really through to really the entirety of August if it wants to. Personally, I don't think we're going to get all the way through to the end of August. I think we will see a directional break to the upside prior, all right, to the end of August. I think it's most likely going to come, right, in the period of July. I'd be surprised if we see a breakout on Friday, the final session of June. I think it is going to, with more conviction anyway, come in the period of July. So think about that. It's very important. We've been speaking about this. And the good news is that we've been continuing to accumulate positions really all the way back through to the end of the fourth quarter into the second or the third trading session of 2019 when we started to see this market take off. Each one of these solid lines has been a continuational entry for us. They have been as strategically placed as possible. And again, we've just simply been accumulating, all right, positions on the diamonds, but more specifically, I mean, I opened the chart of the Dow Jones, but more specifically, at least for myself anyway, it's been more so on the SPY, all right, the spiders, whereby we've just been buying this market at a discount prior to the breakout. Most recently, this time came during the month of May, where we saw the correction, which is now established out of the rising trend line. And these have been the two most recent entries. Okay, we've even had our bullish trigger placed above the whipsaw, false breakout on the industrial average, but that also, again, extends to the activity that we saw in the S&P 500. If I can change my template to remove that of the CCI and the ADX, you can see, if I can move this over and bring it down, we had the bullish entry, at least the third continuational entry in the past couple of weeks up here at 2971, which we haven't been triggered into. Got very close to it again on Friday of last week. We just missed it, which was fantastic. And again, this is also true on the NASDAQ as well. You can see all these markets still continuing to pull back, but at the same time, flipping back to the S&P 500, it still looks as though to some lesser extent, we could very much so, right, still be in that of a bull flag. I'd encourage you anyway. I mean, at least for myself, I'm talking about myself. Still have these contingent sort of insurance policies in the event that, hey, we're throwing a curveball tomorrow and we see the market's up 2, 3, 4%. They just choose to break out. I don't think it's going to happen, but just in case it does, contingency open, 297,140. All right, on the S&P 500 to enter into the SPY positions. That is the contingency trigger. And for the NASDAQ, again, you can see this if you want to play the Qs, 8252, a little bit of fluff above that of the April and May swing highs. All right, so these markets, again, holding up quite well. It's only a matter of time until you see more and more bears capitulate, but at the same time, we're still moving in that ascending triangle across all three of these markets. That's essentially the pattern on the NASDAQ. And again, just to show you this on that's the Dow Jones. We need to bring up the right chart, the S&P 500. You can see very clearly that this is the resistance area mixed with the rising area of support. Okay, now, again, I've had a lot of emails. Actually, I'll just flip to Google because this seems to be the one. And I think I did this publicly too a number of weeks ago. I was just speaking about the rejection and what's most likely going to be the neckline, right, up and around 1125, and how we should set up that of a higher low relative to where we were back at the very early period of June, and how this was going to create that of a double bottom or a W for winner, right? Doesn't matter what you want to call it. And this is essentially going to lay the foundation for the breakout point, which is going to overlay with the overall equity markets breaking to the upside. Well, as it stands, I think really it's sort of following quite closely to what I was speaking about, whenever that was. I think it was last week, maybe 2 weeks ago. But I think you get the picture, all right? We were sort of pre-warning about this, but pulling back right now. This is fantastic. Don't be afraid. Don't be upset. Don't think the sky's falling. This is the end. This is the exhaustion of this sell-off, by the way. It's to a high degree of probability, it's not going to go below this area. And what you should be looking for right now, at least hoping for, is for Google to come down to $1,050, all right? Put in a reversal candlestick, and then that will be the bullish entry to bring down for the bullish pop to the upside. Okay, otherwise, traditionally, you can keep your entry above the swing high, which is now the neckline, which is going to create, as I just said, or alluded to, the neckline of the W or the double bottom, whatever you want to call it. So very exciting period there on Google. It's not something that should actually trigger tomorrow, but it's certainly in the works. And again, that critical figure on Google is $1,050. That's probably going to be the best price you're going to get on Google for a number of years, right? After it hits there or gets very close to it. I mean, that's essentially what you're looking at right now. IBM past three entries, 132, 135 and 136. We're trading at 138, which is fantastic. Again, it looks like a little bit of a sort of a stair-step continuation pattern. We're still looking at this moving to 142. However, it's a good idea maybe to take some profit off the table if you haven't already done so. The same is true, and I extend that to Netflix. We spoke about this over the weekend, just to more or less liquidate this position. The exciting thing for Netflix is if we do definitively break above 389.52. That happens, we're going to see this gallop up to 416. So pay attention to that. It's not ready yet. All right. Disney, if I bring up the exponential moving averages, you can see we're still holding on to these moving sideways. This is the pressure cooker building. You can see the top and bottom Bollinger Band, right, starting to constrict price action. This is going to pop soon. It may not pop, say, tomorrow, but once we crack 143.83, this thing is going to rocket higher. So don't miss out on that move. CVX is still holding up above 122.47. Still not really looking to actually trade this either direction. We're just more or less allowing it to do its thing at this point in time. COP, it's closed. Pardon me, the open window. We saw the reaction, off from that today. Down $1.48. We've spoken about this. This is a process. This is a reversal process. So just be patient with this trade. Still looking at this coming all the way up to about $70 to begin with, but certainly so overshooting that as we continue further into 2019. Caterpillar is sort of front running this move. So you can see the reversal here. First entry was 127. Second entry was 129, and the third entry, most recently as of today, is 135.90. The higher this goes, the less I want to jump into it. Okay, so that'll be the final sort of trigger on this, up to 139. Otherwise, look for it to slow about 142 prior to breaking out at 145, but this is most likely both an intermediate and also macro reversal that has just been priced into Caterpillar during the months of May and also June. So we're very early on in to the actual reversal. Okay, things are looking quite good. It's already accelerated from 120 up to 135, which is a pretty impressive move, but it's got higher prices to go, which is exciting. Baidu still moving sideways. You can bring up the Bollinger Band. You can see that squeeze underway. Boeing Airlines was down a little bit pre-session today. We're pretty much closing at our original breakout entry at 363. Again, we've been talking for the back test of this pivot. That's really what we're beginning to achieve as at the close on Thursday today. Continuational entry 382. Otherwise, look for the reversal candlesticks just below 360, probably around that 358 area on that particular stock. We've got Amazon still lingering up here around 1944, actually below at about 1,900. This is all well and good. A couple of entries on this, right, as low as 1,828. This stock, it's going above not only 2,000, but it's probably going to trend on up. I mean, who knows how high it's going to get, but this is really the next continuational entry, 1977. We're probably going to slow down here because it has been resistance in the past. But overall, Amazon is still a very, very healthy stock. And if it actually comes down to 1,800, that would be a big blessing as well, because you're probably not going to see lower prices on that, similar to what I just spoke about on Google a couple of minutes ago as well. And to really conclude at the moment, Apple's just sort of hanging in there. You can see these past conditional entries. We've had 184, 192 I didn't take, but people have, and then also most recently 197.46. Again, absolute bare minimum, 213.28. I still have a suspicion that we're actually going to come on back down here. We don't necessarily have to, but it'd be interesting if we do. But this is largely contingent, of course, on what these markets do. Whether or not, again, if we put number one over here or number two over here, whether or not this is that of a bull flag and we see the breakout more or less immediately or very early on in the month of July, or whether or not we still have a few wave rotations as we draw closer to the apex, right, of the breakout above resistance or to a lesser extent below support, but very firmly still in the bullish camp, all right? Other than that, everyone, email me if you have any questions. Otherwise, jump into that pro analysis class. You'll learn a lot in there each and every weekend, a lot of educational analysis, forward-looking. This, of course, is largely retrospective. There is a little bit of forward analysis in these sort of afternoon updates. But again, if you're looking for analysis, applicable analysis for the week upcoming, it's best to have a look into that pro class, which I record each and every Saturday for about 90 minutes, okay? Give or take. Other than that, everybody, I'm going to say farewell. Enjoy your Thursday evening, and I'll be back with you. Let's see, it's going to be obviously a long, next weekend is going to be the long or the shortened abbreviated week's worth of trade. I'll be back with you probably in pro on Saturday at this point, unless we see something drastic happen on Friday. All right. All the best, everyone. James signing off on behalf of Pivot Point Trading. All the best. Farewell.